Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Monday, June 1st, 2026. It's a new day, it's a new week, it's a new month, but we still have the same old shtick when it comes to the US-Iran progress toward peace, if you can call it that. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. So the biggest development was that there were essentially no new developments over the weekend. The US and Iran were unable to formally enable the Memorandum of Understanding, reportedly with President Trump requesting new amendments to that. We also had a series of skirmishes in the Middle East and some drones being shot down. So we're essentially in the same place that we were at the start of last week, though the longer the Strait of Hormuz remains shut, the more it's taking its toll on the global economy, and that's how we see markets reacting so far this morning. In particular, oil prices are up about 3%. Nonetheless, indices are edging higher, though that could quickly change. We see the US dollar ticking up in a bit of a safe haven bid, while gold is falling about 1%. This will be the dominant story of the week, any sort of progress we can make toward peace between the US and Iran. But we do have a number of major economic releases. The two that I'll be focused on here will be the Eurozone CPI report. That's tomorrow. Will provide good insight into whether inflation is spilling out beyond some of the energy intensive sectors that we've seen it in so far, and whether that could push the European Central Bank to hike interest rates sooner rather than later. And then, of course, the big kahuna of jobs reports, the U.S. non-farm payrolls report, will be released on Friday to great fanfare. It will be the first jobs report that new Fed Chairman Kevin Warsh will see and could influence Fed policy, though in all likelihood, we're likely to remain on hold there for the near term. Today's chart of the day is a bit off the beaten path. It's the US dollar versus the Chinese yuan, specifically the offshore version of that currency that tends to be a little bit more widely traded. Here we can see on a weekly chart, long-term chart here, that the US dollar peaked around 740 or so relative to China's currency back in mid-2025. And for the past year or so, it's been heading straight down, now trading closer to 676. Technical analysis on this one is a bit hit or miss because it is at least heavily influenced by the People's Bank of China. Nonetheless, there's an obvious trend here, and the next level of support to watch could be around the low 670s. Let's call it 672 or 673. That's where we saw a low back at the beginning of 2023, and that also marks the 61.8% Fibonacci retracement of the big rally we saw starting in about 2022 through 2025's peak. So clear pressure here, and China, of course, is a major player that's been relatively quiet on the US-Iran conflict so far. We'll be keeping a close eye on this currency pair on a longer term basis, and especially in terms of its potential geopolitical implications. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask just one favor before you go, please do drop a like on this video. That will help it get more views and hopefully encourage my bosses to let me do more videos like this. Also, if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading today.